IVM.
Welcome to All Things Policy, a daily podcast supported by Pragati, a flagship media initiative of the Takshashila Institution. We're a bunch of policy nerds based in Bengaluru, and we like to bring a fresh perspective to Indian affairs and an Indian perspective to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Hello and welcome to All Things Policy. I'm your host Satya, and today I'm delighted to have with me Professor Douglas Fuller. He's Associate Professor with the Copenhagen Business School's Department of International Economics, Government and Business, and an expert on global value chains, firms, politics, and technological change in East Asia. Douglas, thank you so much for joining us today. Could I ask you to provide a brief introduction and the kind of interesting work that you have been involved in so far?
Thank you very much for having me on the program. As a brief introduction, I guess I should say I've been following this industry for over 25 years to date myself. I first became interested in the industry because I actually was living in Taiwan, and it was becoming obvious that even back then, this is the mid-1990s, that this somewhat obscure firm at the time, TSMC, was inventing a new model of how to succeed in this industry and was really shaking things up, both for Taiwan's industry and the global industry. And after that, through my PhD, and then as I entered academia, like many Taiwanese businessmen, I moved my focus to China. So I spent, basically the 21st century up to now doing a lot of research on China's industry, which also meant paying a close eye onto what the Taiwanese were doing in China and of course, other competitors, American firms, Korean firms, Japanese firms. So, and in fact, then I broadened my focus a bit to India, at that time not to fabrication or assembly and testing, but to many design activities going on, particularly in Bangalore. Did a number of research visits to India to just try to learn how the development of India's chip design capabilities while developing quickly, were on a somewhat different path than China's.
Thank you so much for that, Douglas. We'll come to that chip design bit towards the end of the podcast because that is interesting area that we want to also understand. Before we dive into today's conversation on how political and economic factors affect semiconductor value chains, let me first introduce our listeners to the general definition of a global value chain. In our previous episode, we briefly touched upon the nature of global value chains in the context of what it takes to manufacture a semiconductor chip. Right. Now, these refer to fragmented production networks and processes. Think of it as international production sharing, a phenomenon where the production is broken down into essential activities and tasks, which are then carried out in different countries. Now, these activities will include design, production, marketing, distribution, logistics, and more. Keen students of economics will point out that global value chains are a result of globalization and the existence of comparative advantages. Technological innovation and business restructuring also influence the formation of global value chains to a large extent. Now, they have transformed the way goods and services are produced and consumed in the world economy because on one hand, this provides companies with opportunities to increase their competitive advantage by efficient value addition at any of the stages that works for them, right? As well as creating challenges for countries in terms of governance, development, and shoring up strategic vulnerabilities, if any, because we know that semiconductors are now part of leading edge technology like drones, military warfare, as well as basically the chips that come into laptops and smartphones, which are part of our everyday life. Now, semiconductor value chains are unique in several ways because first, they're highly complex and sophisticated. They require advanced scientific and engineering capabilities, large-scale capital investments, and very stringent quality standards. This means that an increasing possibility that very few firms and countries will have the competence to play in some of the stages of the value chain, which is why when you mentioned TSMC, they corner around at least 60% of the world's fabrication capability and close to 90% of the leading edge nodes that we have. Second, they're highly dynamic and subject to intense stress factors, driven by rapid technological change, short production life cycles, and an imperative to meet the time to market timeframes, as well as intense price fluctuations. And finally, they're highly strategic and geopolitical. They affect national security and are in turn affected by geopolitical conflicts, so the Russia-Ukraine war, for instance, industrial and trade policy, as well as international relations. So now that I've set the stage, let's come to the most fundamental question here, Douglas, because you have a very deep understanding of this political and economic factors that exist in Asian countries, more specifically. Could you tell us what about East Asian countries like China, Malaysia, Taiwan, Vietnam attracts firms to set up operational stages of the global value chains there? How are these countries either similar to each other or different?
Okay, I think the first slice to take at this problem would be to just look what has happened over the 21st century as compared to the era preceding that. So if we go back to the 1990s, really the two big players in the industry, even in just fabrication, the advanced manufacturing segment of the industry, were the United States and Japan. And behind them were Korea, Taiwan, and Europe. They were all reasonably substantial players, but the two largest were the US and Japan, with, by the end of the 1990s, Japan looking like it was going into decline. There was a lot of pressure from the new foundry model that had been invented in Taiwan and from the growing strength of the memory chip business in Korea. What has happened since then, to put it very bluntly, is those areas that already had capabilities in this industry and then adding China. So we're talking that decided to subsidize this industry, grew tremendously and gained a larger and larger market share. So China's relative share of global fabrication capacity grew by more than 10 times during the last 20 plus years. Taiwan and Korea, from a much higher level, also grew substantially because they were all very willing to continue to support these very expensive investments in fabrication. I haven't mentioned Singapore, but you could tell us somewhat, it's much smaller, it's a city-state, but they've also been relatively active in continuing to support their industry there, though it's at this point basically all multinational operations, non-Singapore operations there. What changed really was Japan. Japan used to be also very interested in supporting its industry in this sector. First, because it was trying to catch up to the United States in the 1970s and 80s. But what really happened to Japan starting in the 1990s was a gradual sort of deleveraging in general of corporate debt. I mean, we could say Japan is still a nation with patient capital. They're not just looking at the next quarterly returns, but there was more and more reluctance to place new big bets in this industry, particularly when the leading Japanese firms in the industry, frankly, were kind of in decline, particularly since they really took a long time to exit the memory business that Korea was taking over. If you look in contrast to the United States, firms like Texas Instruments and Intel basically abandoned the memory business and reinvented themselves to do other things. The Japanese, to the extent they did that, took a much longer period. So from the year 2000 onward, you see the United States, Japan, and the EU, the other big players in this industry, really substantially losing relative market share because they're not supporting the industry very much. They're not willing to subsidize it at the levels that you saw in China, Taiwan, and Korea. Now, obviously, it's not subsidies alone that decide this. You have to have either extant or latent capabilities. In the case of Taiwan and Korea, they already had existing capabilities in this industry. For China, they encouraged the formation of these capabilities through funding for their education system, but also the sheer fact of creating employment opportunities in this area. If you are electrical engineering major at MIT, except maybe in the last few years before that, you weren't really thinking of the semiconductor industry as a growth sector. You were probably thinking of, Web 2.0, then Web 3, and I guess we're onto Web 4, or maybe finance. You weren't very interested in the semiconductor industry. In China, it seemed a much more appealing industry because of all the support behind it. And the other thing China did well is it drew in, the ethnic Chinese diaspora, either people originally from China, the returnees who came back from places like the United States, but also very significantly a lot of Taiwanese who maybe had never lived in China, but given the, shared culture and shared language between the two economies, it would be easier for them to move to and operate in China. So, I think this explains quite a bit at a relatively, 10,000 foot view of the situation, what has transpired. Now, there were other things going on. There was the rise, not only the foundry model, but connected to that, the fabless design model, where the United States benefited quite heavily from that. Given that the US has very impatient capital, many firms were rewarded for dumping their, large capital expenses for fabrication and turning into fabless firms, or there was the invention of new fabless firms from the 1990s onward. Taiwan, to some extent, also benefited from this trend. And China has done so as well. In fact, arguably the area where China has done best, where they're in terms of revenues generated, or in some areas where they're close to the cutting edge, it has been in chip design, not chip fabrication. And there they've really been able to benefit a lot from returnees and also from just the tremendous growth over time of their own domestic market. I don't know if you want me to continue now or...
Okay. Please go ahead. Yeah, that's very interesting. Please.
Yeah. So I think if we look at these other countries in East Asia, Vietnam's not quite as far along in its development. So what you see there, unsurprisingly, is more of the back-end assembly and testing, or so-called OSAT operations, which you see a lot of in China, though in China they've, like Intel used to have packaging in Shanghai. People don't really have packaging in Shanghai anymore. It's moved to the interior because even so-called advanced packaging tends to be very labor intensive, and not labor intensive in the fabrication sense, where you have a lot of very highly educated engineers running these fabs, these fabrication facilities, but, relatively just semi-skilled workers that they need a lot of to manage these factories. So You see that in the interior of China, you see that in Vietnam, you see it in the Philippines. Malaysia tried to do sort of dabbled in fabrication. They also have some OSAT, some of the assembly and testing, but they were never as fully committed. And I think there are issues there due to sort of the complex interethnic relations there. Most of the people in the industry tend to be from minority groups there, particularly the ethnic Chinese group. The state's kind of run by the Bumiputra. There's maybe not as much trust or faith there. So they haven't really, they set up some fabs, but they did not, spend the large sums of money that were spent in East Asia. And ultimately, I mean, they haven't really generated just the as large numbers of trained technical staff to go into these factories. And at least in the past, actually, Malaysia's lost some of its these educated technical staff to emigration, particularly to Singapore, which is of course right next door. So I would say that's sort of the lay of the land as it stands in East Asia. But of course, over the last 2 to 3 years, we're seeing a dramatic change with Europe, Japan, and especially, surprisingly, the United States rediscovering industrial policy, willing to subsidize fabrication in their own economies. And so that may halt these trends of this ever-growing concentration of fabrication in East Asia. And I would have to say, obviously, in terms of Taiwan, there's always this current concern if you have a monopoly or near monopoly, depending on how you want to debate those terms, in the most advanced logic nodes in Taiwan, almost irrespective of the political tensions between China and Taiwan, there's just an issue of general geographic risk. Taiwan has a lot of seismic activity. What if there really was a larger earthquake and it knocked these fabs out of commission? There are a lot of reasons to think that there needs to be a bit more diversification beyond Taiwan in those particular nodes. Whether that diversification is done by TSMC itself, who's dominating those advanced nodes, or other firms like Samsung and Intel. If I make a brief note on India compared to China, I would say what's been interesting about India is it has built up very strong capabilities in chip design, but it's been a bit stymied in the fact that it hasn't had the downstream internal demand. There haven't big system houses in India buying tons of chip. There's no Huawei or ZTE as of yet in India that would encourage the creation of fabless design firms in India that own their own chip. So the sort of modal Indian firm in the chip design space has been a design service firm. On the one hand, technically, some of those have been quite impressive, and the impressive ones tend to then be purchased by multinationals. So there's a proven exit model, but it does mean you're not capturing as much value compared to the actual technical level of the designers. So, it's clear that there's a large number of very skilled chip designers in India. They, are no slouches compared to the best firms in China, like HiSilicon, except they're so thus far trapped in this model of design service, or then, ultimately being bought out by multinational firms to do design service in-house. However, I think going forward, as we see more system house and developments in India, more electronics assembly, and of course, potentially the larger and larger chip consumption in other industries, let's say e-vehicles or electric vehicles or other industries, then maybe there'll be many more opportunities in India to create their own fabless firms and sort of follow on Chinese trajectory in that regard. I didn't say anything about India's own plans for fabrication facilities, and India has itself decided to put money on the table to try to encourage chip making in India. Obviously, this has been talked about for a long, long time with various plans. And so right now, the biggest thing we have, I guess, is this Micron OSAT facility. Now, I would say, on the one hand, it's, I guess, a marginal win for India. It's not the fabrication side. But on the other hand, India right now, at this moment in time, is facing an international situation where all of these other more established players are willing to throw money at chip fabrication. So it's hard to convince, particularly these leading firms, let's say Intel, who, shook down Germany from another $3 billion and is getting a lot of money from the US government, and other firms, Samsung as well, to come to India at this time, because there's just all these opportunities. If you're Samsung, money also from the Korean government to place fabrication at home. However, if India keeps some of its powder dry, so to speak, and waits another 5 years or more, I think at that time, you may see the spigots, run dry in Europe and the US and probably Japan as well. And then suddenly, as firms look around for who's giving the most generous subsidies, India may look like a more attractive location. Right now, it has less to do about India and more to do about the sheer fact that these other governments have started to throw around a lot of money. The other issue, of course, is what kind of chip making capacity do you want and need? I don't know if every location needs the most advanced logic nodes. Certainly, it's not good to have them all hyper-concentrated in Taiwan. But as some people have argued in Europe, well, maybe Europe should be concentrating, fostering more of the type of niche semiconductor production that STMicro and the others do, expanding that. A lot of that goes into traditional strengths in manufacturing that the Europeans have, or maybe mature node production that would go into electric vehicles, again, which is hopefully going to be the transition from European automotive strength into e-vehicles is what they hope to accomplish. There you'll need a lot of logic chips. Many of them will be much more mature nodes. So we can have these debates, or if you want to invest in memory chips. But right now, I think the sort of social contagion among these policy elites in various countries is they've all decided that they need advanced logic. So that's what they're investing in. And then secondarily, if you're talking about particularly the US and Korea, then it looks like Micron will be able to, in the US, take advantage of the CHIPS Act to get subsidization, set up new memory fabs in the US. And of course, Korea is doubling down on its strengths in that area.
Right. Thank you for that really detailed analysis. That's some of those things I've never heard before as well, which is the ethnic factor in Malaysia semiconductor industries workforce. That's something very interesting.
Yeah, I wouldn't say it's just in that industry. I think it's a general issue that kind of pervades their policy making. So the Malaysian state tends to, only do industrial policy sort of half-heartedly because there is this, I guess, gap in trust and likewise between the more entrepreneurial elements in the society, which are from different ethnic groups than the state elites.
Right. That is a factor we should probably look at when we are conducting comparative analysis of industrial and trade policy. But aside from that, going back to your point about India's chip design strengths vis-a-vis China's, so let me come to the point where I believe your book, Paper Tigers, Hidden Dragons, touches upon this, the way in which China's IT industry has flourished, the hybrid institutional model, like you said. So coming to India, when we look at China's heightened efforts to also achieve resiliency and self-sufficiency in semiconductor production, especially after the US unequivocally declared war with the CHIPS Act and everything, how might its domestic, hybrid, or state-owned firms be able to rise up to the challenge? Is there any insights or learnings we can take from this analysis to India's own context?
Yes. Well, first of all, I mean, India also has this tremendous diaspora population of technologists, and, a lot of them are involved in, circulation, brain circulation, as Annalise Saxenian would put it, that they often move back and forth between, let's say, Silicon Valley and Bangalore and other high-tech clusters in India, Noida, Hyderabad, and those places. So there's already that key element that China has used relatively well. I think the issue then is to set up business ecosystem where the opportunities for growing large semiconductor firms, then the possibility of that will be higher. And then a lot of that really would probably depend on having, as I said before, this downstream demand. So it may seem counterintuitive, but, attracting and encouraging a lot of the lower tech electronics assembly, sort of the Foxconn style firms of the world. I know Foxconn also says it's going into chips, but Foxconn makes many different announcements that never come to fruition. But encouraging more of that type of production, eventually over time, organically, one would hope you have more and more local Indian firms entering into those supply chains and then themselves becoming a large source of demand for chips, where they can either internally create their own design arm, which is what, of course, Huawei did with HiSilicon, or just create a market for fabless design firms, which also occurred in China. So, a lot of these other successful chip design firms in China are basically fabless firms serving local and to some extent international customers. But I think without the local customers, it would have been a hard sell to raise capital to invest in that industry. Unfortunately, it's, the cost of design has increased over time. Maybe it will come down now with the AI revolution, but it hasn't been that interesting for traditional venture capital investors to invest in that sector for them to take it through all the series of investment rounds that you need, because just the cost of capital is substantial. And then there's now a lot of established competitors. But I think with this local market demand, there may be a ways around this, particularly sort of the in-house approach. The other thing China did, which is more controversial and I think had mixed success, was just throw a lot of money at any sort of chip activity, declaring that, okay, the state guidance fund and others are going to invest in all sorts of activities in the semiconductor industry. I mean, the problem with that model is it can be a bit wasteful. I mean, they have tens of thousands of firms that claim to be in the semiconductor industry. How many of them are actually creating rather than destroying value, given that they receive some direct or indirect state support, is a question that merits further scrutiny. I tend to think that there's a lot of waste there, particularly at this point in time where China already has actually been relatively successful and created some substantial size design firms. So it seems doubling down on that may be relatively mistaken for them. That you know, they already had the smart money investing wisely, and now they're just throwing a lot of dumb money on top of that. However, in the case of India, where there haven't been a lot of these established design firms that own their own chips and then consequently capture more value from them, it may be a smart move to, you know, subsidize the cost of investment in this area, given you're at sort of a different stage of development and fabless design, house development than China is.
That is a very interesting point. So India has design-linked incentive schemes for semiconductor design right now, and there's a bunch of associated and allied industrial policy and research policies like chips to startup programs in India. So I'm very curious to understand, how does China's, copious subsidies for design firms differ from India specifically? Like you mentioned it, that the state-owned firms probably are guzzling through money without much in the way of value addition. And since India is currently a newbie in the sector in terms of starting the subsidy in the first place, how would you characterize the difference there?
Well, I mean, China has done it many different ways. I mean, some of them I think were reasonably sensible. You know, going back to 2000, 2001, tax subsidy, tax write-offs for such activities. They also had all of these IC design bases, I would argue. And so this sounds a little bit more like some of the things you mentioned in India, where, okay, they would subsidize the cost or even have free EDA tools for the firms in those IC design bases. But what was interesting about that whole approach is the firms that tended to grow up and be successful didn't really use those bases, because at that time there were already firms, VCs, interested in the chip industry. They tended not to be traditional American Sand Hill Road VCs. They were more likely to be Taiwanese venture capital firms and some firms from Hong Kong, Singapore, who decided that investing in the Chinese chip design industry was a good route for them. And so that VC investment was really led to more of the success cases. Now, those tended to be, they chose firms that probably had more returnees and more established returnees. But even there, if we're talking about returns on their investment, it's unclear that they were often great success stories. Again, going back to the idea that the chip design hasn't been the boon for venture capital that other kind of startup spaces have been. And then even back then in the early 2000s, there were some state funds dabbling in this, but they tended not to, sometimes they weren't even investing in firms, really. They were just investing in infrastructure. Okay, some of that infrastructure may have been helpful, but also, or they were just investing in state-owned firms. They weren't, I would say, being very helpful. The state guidance funds that have become more and more ambitious over the last 10 or more years Because I mean, even before that term was used, there were already really a lot of these state-owned funds of funds who were doing this. There, I think you see maybe they're overall less helpful in terms of, are they really fostering the ecosystem more than they would if those funds were put into another part of the semiconductor industry, and particularly in the frenzy that may be dying down now over the last few years, where there's been just even more entry in this market to get these subsidies. That seems much more questionable because, ultimately there's only going to be so many viable firms you can have. And China already had a fair number of them. The subsidization on fabrication, I would argue, worked better just in the sheer sense of, did China grow its relative share of capacity? Yes, it did. There, though, I think, again, the subsidization that went to multinational fabs by TSMC, UMC, SK Hynix, Samsung originally, also, Texas Instruments and Intel, tended to be better bets than a lot of the investments in the local firms. And going back to your question about state ownership versus other types of ownership, I think one unfortunate thing about China's financial system is it does tend ultimately always to go back and prefer to support state-owned firms, or at least state-linked firms. So, before it was taken over by the state, SMIC, China's leading foundry provider, arguably it did receive some support, but it probably received less support than it should have, given its relatively high performance compared to other firms in China. And what we've seen under the Xi administration, from when the mega project for the chip industry first came out in 2014, really a doubling down on state ownership. So SMIC was basically effectively taken over by the state. The other big projects they've had are effectively state-owned. So CXMC in Anhui province doing DRAM, and of course YMTC doing flash memory. Behind them is basically a lot of state capital. And there's a long track record of state management of high-tech firms in China not doing very well. If what you mean by high-tech is industries that are not only just scientific intensive, but also fast-moving. The Chinese state doesn't really, and maybe no state really, reacts well to new information in the marketplace with appropriate speed. And I think that's always been its undoing in these sectors. And it's tend to try to use government procurement, but not have very sort of open and competitive government procurement. So it's basically not sort of sending itself appropriate signals from the market. And it does encourage, there's sort of political entrepreneurship that entrepreneurs can engage in. Arguably, as an ongoing enterprise, maybe it would be better for SMIC, at least prior to its being placed on the entity list, to focus on slightly less advanced nodes, really focus on more operational efficiency. There's still a lot of money to be made there, but I think its top management, or at least one of its two co-CEOs, knew what would please the Chinese government the most, and that was to talk about doing the most advanced nodes, even though it seemed that SMIC wasn't doing those very efficiently. Similar, I think YMTC, all of its talk about advanced flash was a bit exaggerated, but clearly the original audience was the Chinese government. Now, they were especially unfortunate because I think they didn't play this scenario out, that the same exaggerations they told to the Chinese government and were reported in the Chinese press would work its way to places like the US Defense Department, where then the US became very concerned for security reasons about the so-called advanced flash of YMTC, even though there's not really much evidence that they've ever been able to do this efficiently at scale. So the lesson from there, I would argue, for India is maybe not, maybe have state support, even some, state investments directly in firms, but as much as possible, try to give these entrepreneurs free reign over these firms, have at least, as the Chinese would say, privately managed. So often when they say privately managed, it's really not. There's still some interference there. Have foreign firms, have various types of structures for domestic private firms to enter this marketplace. I mean, the case of Taiwan is quite instructive. So they, if you look still today, the two biggest chip making firms in Taiwan are TSMC and UMC. TSMC still has one board member from the executive yuan fund of the government. But even in the beginnings, they basically allowed Morris Chang, as long as he could somehow raise money to do it, to run the company. They knew enough to know that they didn't really understand the semiconductor industry. And UMC, the same way, it eventually was basically privatized, and there's no government representative on their board at all. So there you had a legacy of state ownership, but quite free reign was given to these private entrepreneurs to figure out the best way to go forward. I mean, there would not be the TSMC foundry model without Morris Chang. This wasn't a government decision. They didn't, know anything about this at all. But the government support arguably was critical to allow TSMC to be the first mover, because the conditions were not yet ripe for the foundry model when TSMC created it. It wasn't really fully developed that you could have, just this GDS2 file and just send it over electronically. But Morris knew that's where the trends were headed. That's why he couldn't, he went around to the leading chip makers at the time, Intel, Sony, and the like, and they all, Texas Instruments, where he previously worked, and they all turned him down. This was a bit too revolutionary when he was making plan for it in the mid-1980s. But by the early 1990s, the conditions were ripe. And so, they were the lead firm at the beginning and have been ever since, which is sort of an amazing track record to always stay in the lead in that particular segment. But that would have not, even though there was state capital, the business model itself was the innovation of Morris, not the Taiwanese state.
Stay tuned to All Things Policy. We'll be right back after a short commercial break.
That's actually super interesting, because many issues that the India government's current semiconductor mission has, in terms of focusing on displays, for instance, which we are not sure about, having any strategic significance as of now. But the one thing that we can give them credit for is the fact that there is no overwhelming pressure from the side of the state to invest in only the leading edge nodes, for instance. So I think a lot of the fab proposals that are being put across right now, focusing on nodes 28 nanometers and above, which makes sense. Like as you said, there's a lot of money to be made there in electric vehicles, Internet of Things, 5G infrastructure, and other telecom case usages. So that's very interesting to know, because like you said, like paper tags, right? A lot of Chinese companies considered to be the new, I don't know, Intel, new Nvidia, etc. Moore's Threads, a company from China, which is creating GPUs, I believe, along the lines of Nvidia, and there have been some mentions of them reverse engineering and using corporate espionage to use Nvidia's old designs to create the new GPUs for AI compute hardware. But yeah, so marketing could say a lot about those things, but it's also, I assume, the focus of the state and how the state-linked companies are trying to appease that particular requirement, I believe. So that's very interesting. So coming towards the end of our discussion, I believe, so we have talked a lot about the economic factors and some political factors, but what kind of institutions that are global or domestic, which can influence factors determining which host countries that this global value chain operations shift to, when we look at firms following China plus one strategy, right? So as they seek to decouple their production, design, logistics, packaging, and testing operations away from China, what kind of political and economic institutions influence the transfer of this operations to other countries?
Right. Well, I mean, I think we probably should stick to dividing up the semiconductor value chain into three big parts: the design, fabrication, and
Testing.
And the A&T, the OSAT. I mean, I think for the OSAT, even though there's more and more concern that we need, so-called advanced packaging, maybe nearshoring if you're the US or Europe, a lot of that is still quite labor, as I said, semi-skilled labor intensive. So there's going to be, to some extent, just simply, okay, where can I find the semi-skilled labor in that second? It's never been the case. Even when Taiwan and Korea were doing OSAT in, let's say, the 1970s, that wasn't what led. It didn't somehow, those weren't the steps that then led them to doing fabrication. They were sort of activities that were not fully connected to what became the fabrication firms in those countries. So it gets a little bit more complicated, particularly when you're talking about future trends in advanced packaging, where suddenly they are going to become more, they're already becoming more technologically sophisticated, but there'll be maybe more and more reasons to reverse trends of outsourcing assembly and testing and then, keeping them in-house for certain advantages. Even a foundry like TSMC is now doing some of its own packaging and, of course, as well as these IDMs. And I would say this is probably most critical in the memory space, particularly DRAM. So maybe that is a particular win if you first start with a Micron assembly and testing facility. But generally speaking, the assembly testing has just gone to locations where there's cheap labor. Now, one institutional factor I haven't talked about, which feeds into that and just feeds into relative wages, is, of course, which countries are engaging in financial repression, keeping their currencies undervalued. And a lot of these East Asian countries have done that or are continuing to do that. Taiwan, has outrageous levels of underappreciation of its currency. That's why it's running these large 10, 12% trade surpluses. Korea engages in this. Japan does. Singapore does. Vietnam to a certain extent. Malaysia. And, post Asian financial crisis, you had sort of newcomers that, we better, understandably in some sense, we better build up our foreign exchange reserves. So you have Malaysia and Thailand doing it. So that does, their internal labor costs are lower than they would be if they actually had sort of freely floating. exchange rates. So that's an important factor. Now, I mean, it's not just East Asia. If you're looking at Europe, you have Switzerland, you have Sweden, who clearly, they're not doing Taiwan levels, but clearly are setting the value of their currency a range where they're running consistent trade surpluses. In fact, Denmark, where I'm working, so they have it. They're basically the Danish kroner is tied to the EU, to the euro, but it's sort of pegged to the euro, and it's constitutionally pegged at such a degree that they've been running trade surpluses. So I do. When Danish colleagues say, "Oh, we're not like the Swedes," because it's in our constitution. The real question is, well, if it changed that they started running, trade deficits, would they suddenly change the constitution or not? I suspect they would. But and of course, China also, ranging over time, but has had pretty substantial currency interventions to continue to run trade surpluses. So that's been a very important factor. There's also just how the financial system is set up. Are you encouraging more patient, long-term capital? I think that's particularly critical in the memory area. So between Korean state support and the fact that, the Korean chaebol has sort of the largest of them have very large sources of financing to tap, non-bank financing within the chaebol groups to tap, has really helped them out. Interestingly, this time around, so in the past, Samsung's done a brilliant job of having lower costs per piece of the capital equipment because they would wait to downturn, and then when no one else was buying applied materials equipment or ASML equipment, they would sweep in and get the equipment at bargain basement prices. This time around, they're not, in this during downturn, they're not really doing that, because I think all of these new subsidies that have come on board in various countries have, despite the recent sort of downturn softness in the chip market, they haven't led to these bargain basement prices for equipment. So it's sort of cut off what used to be a tried and true strategy for Samsung in that area. And in Taiwan, they do have these state policy banks that have been willing to support investments in the industry. They're a little bit more, or actually I would say a lot more costs conscious, though. You don't see the enormous creation of non-performing loans that you see in China and Taiwan. So, they're willing to back clearly viable winners such as TSMC, but the type of firms that just live on but never live up to expectations is pretty limited in Taiwan. Yeah, there's Taiwan Shipbuilding that they've never managed to kill off, which is a state-owned enterprise, but it's not very big at this point. It's not hogging up a lot of the resources. And there's national security arguments for maybe keeping Taiwan Shipbuilding around. So there are these internal financial institutional requirements. Generally, all of these countries in one way or another have been trying to figure out how we can, have continual support for this industry that maybe buffers it somewhat against what you alluded to at the beginning, these big bust and boom cycles in semiconductors, which is particularly true on the memory side. So the Chinese answer has been really a lot more of just blunt force, central and regional government subsidies. And of course, then the hidden subsidies through the state banking system. Those are often tied together because the banks take their clues from government policy. Oh, the government says investing in chip making is good. Okay, we're going to approve all these loans to chip making firms. Hopefully the government will bail us out if they go bad. And then the chaebol structures in Korea. And, even in the US, the new financing that Intel has set up also seems to be sort of an approach to try to have a more steady and stable source of financing for manufacturing than has been the case. I mean, I would say for the United States and parts of Europe, because of these various institutional factors I've mentioned, the US and parts of Europe and other Anglophone countries, let's say Australia, have really disincentivized investing in manufacturing until really, in the US at least, until the Biden administration. And thus far, it's had actually already a pretty substantial effect if you look at the increase in manufacturing investment. The question, though, is what are the various mechanisms you can build that into the system as institutions over the longer term? So, I mean, that's also an area where India will have to think about, what are the structures we have that encourage or discourage investments in advance in technology, investments in manufacturing. And if there are disincentives, how do we create new structures to solve that problem? As the Biden administration has kind of said, there's always been industrial policy. It depends on industrial policy for whom. In the past, let's say Clinton through even into the Donald Trump administration, because he didn't really have any serious policy other than export controls that was not well thought out in his time. U.S. policy was to favor, let's say, finance, right? Carried interest and things like that was an industrial policy in favor of finance and discriminated against other activities, which I think almost everyone would agree today was not a good idea, even though it was on the part of a government, maybe just the unintended consequences of lobbying by industry and listening to that.
To mention that, so the US's approach can be very drastically different. In India, monetary policy, industrial policy, and trade policy are fairly decoupled from each other. So as we are seeing, like you mentioned, the role of monetary policy in bankrolling a lot of this, financing manufacturing companies, that is not something that I've seen before in India. It's primarily industrial policy. So,
right. I mean, my understanding is that India has not really had this East Asian financial repression, keeping the rupee unnaturally low to run trade surpluses, plus all sorts of other policies encouraging manufacturing. It hasn't had that is sort of the modal East Asian approach. Now, there's many differences within that approach, which I would argue explain why Korea and Taiwan have been much more successful than, let's say, and in even Japan, much more successful than China. I mean, they haven't been so wedded to supporting the state-owned sector, and the state-owned sector, to the extent it exists, has not been as inefficient because it's been much smaller and had to be somewhat efficient than it has been in China. I mean, I would say even in the US, these things are not well coordinated. I mean, if the US really wants to get serious about tilting away policy from consumption towards production, or just balancing out at least, it has to come to terms with the role of the US dollar as the choice for central bank reserves, because this creates a natural demand for dollars, makes the US dollar sort of unnaturally valuable, which ultimately is a tax on US exports and a subsidy for imports. I think one of the problems, though, is the Biden administration, rightly or wrongly, they do want to be very multilateral, and the countries that are doing financial repression are just China. A lot of them are close U.S. allies. So it puts the U.S. in a very awkward position if it were really to make moves to clamp down on this. The other explanation, of course, is just the power of Wall Street. Wall Street loves that the US dollar is overvalued because it's a boon for them. They have a lot of lobbying prowess. So, though the counter argument to that would be there's a lot the Biden administration could do administratively that it wouldn't have to do through Congress, where most of the lobbying really takes place, that they could otherwise do. So there is this big disjuncture between American industrial policy and monetary policy, and frankly, trade policy. If we really, if you're really concerned about financial repression, it ultimately is a trade policy for the reasons I mentioned, that it's a tax on exports and subsidizes imports from the U.S. perspective, or another country where its currency is continually overvalued, like the British pound, the Australian dollar. But again, this then would mean squabbling with allies, which the Biden administration at this time is unwilling to do. I haven't really said much about the export controls. So just briefly, if I may, because I think they're quite important and will impact.
Sorry, so that'd be great, because I wanted to bring in the idea of how does comparative advantage in terms of traditional economic reasoning versus today's geopolitical context, where the chip wars are the new norm, where self-sufficiency and to an extent protectionism seems to be the primary dictator of, like you mentioned, governments, states working in this direction. So that would be great.
So, I think the export controls, the revised ones from October 7th of last year, they are extremely, and most of them, extremely well thought out and much harder to evade than the past ones. And here I'm specifically talking about advanced fabrication, particularly advanced logic fabrication. So this means it's going to be really hard for quite a substantial amount of time, let's say 10 years, for China to have advanced fabrication at any sort of efficient scale. Now, down to maybe 6 nanometer, you can use like e-beam technology and do it very inefficiently, but you can still make chips. As far as China's national security concerns go, that might be very worthwhile for them to do. But it makes it, the more chips you need and the closer you get to commercial competition, then that becomes much more difficult. So you mentioned Moss threads. And if Moss threads is going to, really be a competitor with NVIDIA, then it needs somehow to be able to access advanced fabrication abroad. So, whether it's TSMC or Samsung or even Intel, and they're unlikely to be able to do so. The thing is the licensing regime, there is presumption of denial, but, maybe there could be some breakthrough in the future where the US decides to take a different track. At this point in time, I would not count on that, but I think it's going to be the real choke point of not having access to that advanced fabrication will make it quite difficult for fabless design firms in China who want to do that. And it also, it's already this year, fabrication investment is way down in China because, they know that they can't really get the equipment for these advanced nodes. They don't have domestic alternatives at the advanced nodes. So it's really more skewed to the mature nodes, which are, I would argue in some sense, maybe a better investment for them anyway with the established market. But we're kind of seeing the controls then be counteracting China's subsidization. Like, okay, you subsidize, but now you can't get the equipment. So we've neutralized that. So China, I would predict, might actually stand pat or lose relative global market share going forward in fabrication because of those controls. And even where it looks promising, so let's say 28 nanometer, this nice mature node, there's a lot of e-vehicle demand at that node, and they can buy the foreign equipment for that node. It seems going forward, there's going to be trade headwinds, not just from the US, I would predict, but from other major economies, such as the European Union. Are they just going to say, okay, we're going to import all our e-vehicles from China? They probably, since that's a major industry in Europe, not going to allow that to happen. And then, so the external demand, export demand for Chinese e-vehicles may not be as large as people think today. So if that external demand, European demand or North American demand is met in Europe or North America, you would very likely see, and you already see firms announcing that they're, planning to build these mature node fabs, like automakers themselves in those home environments, whether it's Japan, Europe, or North America. So, I think there's all these knock-on effects that kind of are putting a cap on Chinese fabrication. And in other areas where thus far there's been a lot of loopholes, Chinese firms are still getting a lot of access to quite advanced NVIDIA GPUs.
Landing and everything, yeah.
Some of those loopholes, it sounds like the US government is moving a foot to close. And again, here, this is really administrative law, so it can be just done within departments of commerce. They don't need to go to Congress for this. So I imagine that is why Jensen Huang seems so nervous and say, the US is destroying our market. But other loopholes may be harder. There's all these offshore, cloud-based services sort of renting GPUs. They're in third countries. Some of those countries are our allies. Is the U.S. going, further hurt the business interests of allied countries? And even if they wanted to, what is the legal basis for this?
Right.
It's a little bit unclear. Having said that, I've talked about the multilateral aspects of the Biden administration. I would also argue, though, that there's been kind of sneaky unilateralism disguised in multilateralist rhetoric. The October 7th controls around, access to advanced fabrication equipment, we're basically presenting a fait accompli to the Netherlands and Japan. Look, this is what we're doing. Good luck building a fab without any of this American equipment. Eventually it could be done, but you can't do it. And also, you have to go back to pretty old DUV, deep ultraviolet lithography equipment,
right,
where there isn't significant American content in terms of the light source. So that's sort of the unspoken, or maybe it was spoken in meetings between the U.S. administration and the Netherlands, but U.S. export controls are fungible. We could just say, look, because it has this embedded U.S. content, sorry, you can't sell it to China. So there was, significant leverage that the U.S. had, particularly over ASML in the Netherlands, that I think explains a fair amount of this. And I have heard arguments that there is in some Japanese equipment, some significant U.S. technological inputs, but I've never gotten sort of the hard data on that. So I don't know if that was also a factor there. On the other hand, even though Japan's already announced, that it's going to have these export controls, it's very unlikely that they're going to have presumption of denial like you have in the US, where it's just very hard to get a license. So it may mean that a lot of Japanese equipment is still readily available in China. However, China still has a problem of replacing, lithography plus all the US equipment. And now that it's sort of relative consumption of such equipment is in decline, there's less an interest in other parties, whether Japanese or Dutch, in, really fighting with the US about this. I mean, if you're ASML, you don't really care who's buying the equipment, whether it's American or German or Japanese, as long as it's bought. So I think the offsetting any pain from the controls are just the huge amount of subsidies coming on from various countries. So
No, that makes sense. But would you say that the idea of comparative advantage being the primary driver of economic decisions like this is something that we've seen die a slow death? Is that it?
Well, I think there's two aspects of this. One is we no longer care only about supply chain efficiency.
Right.
We no longer want to get the best fabrication service at the cheapest price without at least querying about what happens if the fab in Tainan that's delivering this can no longer do so. So that is one issue, that there's more and more interest in saying, we might have to pay a little bit extra for some sort of backup plan. And the second issue goes back to, what is this comparative advantage? Is it sort of organically, naturally evolving, or has it evolved due to many of the institutions I've just named? I mean, if your workers are naturally, 15 to 20% cheaper because of financial repression, then is that,
it's not organic. Yeah.
is that really comparative advantage, or is that something else? And of course, these things build on themselves over time. TSMC does have a lot of organizational capabilities that no other firm, Taiwanese, nor American, nor Korean, have. But in part, they also benefited from all these structures that weren't really just organic comparative advantage to help build those. So I think it's a bit ironic. You hear a lot of rhetoric from Korea and Taiwan about, it's terrible that the US is trying to subsidize its industry. It really comes across as, don't do what we've been doing.
Yeah.
Particularly when right after they say that, they then double down on their own subsidies at home. I mean, if it was just comparative advantage, then why have these continual subsidies? I mean, if we go back and look at that OECD report from 2013 to 18, that had data on 2013 to 18, pre-US-China trade war, even though they were very critical of Chinese subsidies, there were substantial subsidies in Taiwan and Korea even then. And in some sense, they were less forgivable because Taiwan and Korea had already achieved comparative advantage, right?
Yeah.
China was the latecomer. China was the country that had a better argument for being, the semiconductors being an infant industry for it. So I do think that's why I started off with this, picture of the 21st century is basically those countries that subsidized and already had extant or latent capabilities gain market share, and the ones that sort of stood pat relatively. I'm not saying there weren't any subsidies in these other countries, but they lost market share. And that's just been the way of this industry for quite some time. Now, if you want to be an economist extremely concerned about efficiency and say, well, if everybody subsidizes the industry, it could end in disaster. That is plausible. It could be like the shipbuilding industry in the 1970s. Everyone in East Asia and Europe decides that this is important sectors to support. And so the vast majority of the industry doesn't make any money. But I think offsetting that is the fact that this is still a growth industry. Chips are seeping into more and more sectors and getting more and more demand in those sectors beyond the traditional electronics sector. So there's clearly a need for more capacity over the medium term. And the other issue is, okay, well, if you don't do that, you're never going to get this industry back if you're Japan, Europe, and the US. I mean, I think some people want to make this argument about whether or not Europe or Japan or the US will be able to surpass, let's say, TSMC in logic foundry in terms of both having the most advanced node and creating that most advanced node at with greater efficiency than TSMC. And I think that's a little bit too high of
that's
standard.
The wrong question to ask, I suppose. Because
I think if you're concerned about supply chain resiliency and these other issues, and having an industry 5 years from now, so you can build on that industry tens of years from now, you don't completely lose those skill sets. Having just a viable advanced foundry that's maybe neck and neck with TSMC, and maybe slightly less efficient than TSMC, given that TSMC has always led this industry thus far. That's still a pretty successful outcome. Or even I would go a step further and, if prior to the CHIPS Act, trends continued, the US and Europe would just see further and further dwindling of their global market share. So even if the US and the Europe just retain, these not that high shares of the global semiconductor market, that's sort of a success compared to what the alternative would have been. And of course, I think many people now feel that they don't want to prioritize just economic efficiency, that there's a need in terms of security, whether narrowly defined in sort of defense security or more broadly economic security, to have some sort of nearshoring where, if suddenly all the Taiwanese fabs are knocked offline, or, the trade with East Asia even is made much more difficult because of some sort of geopolitical conflict there, that advanced society based on semiconductors won't grind to a complete halt.
Right, that is quite interesting. A lot of those insights are things that I haven't heard before. So, needless to say, I would love to do a lot more research on it. I believe that brings us to the end of this podcast. It's also, I think, one of our most lengthy episodes, which is a great thing because it's very rare to find new conversations on a topic that is so heavily debated upon in today's context. In the future episodes in this series, we will be touching upon a lot of the factors that you mentioned earlier today, like strategic concerns surrounding semiconductor value chains, overriding traditional economic concerns that would have driven the growth and expansion of this process, right? So thank you so much for joining us, Professor Fuller. It's been a pleasure to have you.
Thank you, Satya. Thank you. I'm sorry I was so verbose and kept the episode too long.
Absolutely not an issue. That's I love the fact that you went into so much detail. That's the picture you painted of the East Asian economies and the way, so financial repression, for instance, that being a factor is something that is completely new to me and that is going to help me a lot as we conduct a lot more research into understanding what needs to be done to help India's semiconductor ambitions become fruitful, and making comparative analysis. So please don't apologize for that. And to all our listeners, thank you very much for tuning in. Please stay tuned for the next episode of All Things Policy tomorrow.
Thank you very much.
If you liked our show, don't forget to check out other interesting podcasts on the IVM network. You can tune into them on the IVM Podcast app. ivmpodcast.com or wherever you listen to your podcasts. You can also follow IVM on social media. The handle is @IVMPodcasts on Twitter, Facebook, and Instagram. And hey, if you'd like to dive into Takshashila's research on technology, strategy, and economic affairs, check us out at our Twitter handle @TakshashilaINST or our website takshashila.org.in.